Happy Monday, everyone. This is Rob McDougall from Zank Financial here with your weekly economic update. Today is Monday, May 19th, 2025. So before we hit all the economic activity that hit last week, there was a piece of information that came out after the markets had closed on Friday that does have great importance for the U.S. market. And that is that Moody's rating service downgraded U.S. government debt to one rank below AAA. Now, the market initially this morning reacted negatively to it, both in the bond and the equity markets. Both markets have recovered since. And although this normally would be a big event, I think it is diminished by the fact that of the three rating services, S&P, Moody's, and Fitch had downgraded the U.S. debt 2022, 2023. And S&P actually did their downgrade in 2011, 2012. So Moody's downgrade, not that big of a surprise. The timing, a little bit disappointing or surprising to some because nothing has really changed. The tariff situation, some unsettled nature there, but this is right in the middle of the government's negotiations over the new budget. So timing is a bit suspect. But nonetheless, we're pleased to say, at least at this point, that the market is not reacting aggressively on the negative side to this downgrade. So let's take a look at the economic activity that was released last week. And there is a lot of data points here. We're only going to hit the big ones. The biggest ones last week really were inflation-related CPI, retail sales as well, and consumer sentiment. So we'll start off last week, Tuesday, the CPI. Both the core and the headline numbers came in actually better than expected. So the inflation rate on a month-over-month basis was expected to be up 0.3% month-over-month, came in at 0.2. Same is true of the core numbers. So that is really good news for the bond market, good news for the U.S. economy, really, with inflation coming down. That will give the Federal Reserve additional room to maneuver later this year at some point if the economy does indeed stall, which many investors are worried about. So CPI, really good report on Tuesday. Then on Thursday, maybe even better, the PPI, Producer Price Index. That came out and that really was well below expectations. So the headline number for PPI was expected to be an increase of 0.2% month over month for April. It came in at a negative 0.3%. And the core number, actually, that came in at a negative 0.4. So in both cases, much better, lower than expected. So this is important for future inflation because producer price index, that's those products that are becoming products. They are goods that are becoming products at some point and will feed through the system. So it augurs well for inflation in the months to come. So also on Thursday last week, retail sales. So retail sales, a little bit, definitely weaker this month in the month of April. You may recall we've talked about the fact retail sales were flat, slightly negative in January, improved in February, improved in March, but were expected to be pretty close to flat for the month of April. Actually came in at a positive 0.1, although the retail sales ex-auto also had a 0.1. That was a little below expectations. But net retail sales close to expectations, so that's a decent data point. Same day, Thursday, initial jobless claims, as it is every week, came in exactly as expected. So we're looking for a spike here at some point, either DOGE-related or large corporations starting to shed workers. We're not seeing it yet at this point. So 229,000 initial claims, new claims last week, same as prior week, same as consensus. Lastly, on Friday, the Michigan Consumer Sentiment Number. We've talked about the fact that this index was changed last year, so its value in looking historically, it's not great. It's not comparable. You can't look year over year, but certainly month over month you can, and the expectation was that index would come in at a 53.4. It came in at a 50.8. So that's a very disappointing and negative reading. But the somewhat interesting point here is that consumer confidence continues to lag, roll over, go lower. However, retail sales are holding in really well. So sentiment poor, nonetheless, U.S. consumers are spending. It's not the first time we've seen this, but nonetheless, a little bit surprising. So, in terms of the markets last week, equity markets very strong. S&P 500 up 5.5% last week. That took actually the year-to-date now positive. So all this amazingly bad news that we've had, particularly tariff-related over the last month and a half, you wipe that all out and you just look on a year-to-date basis. S&P 500 up nearly 2% as of the end of the day Friday. So very strong week for U.S. equities, strong week for U.S. growth stocks. And the international markets also up, not nearly as strong as U.S. market, but you had developed markets ex-U.S. up nearly 1%, and you had emerging markets up nearly 3% for the week. Now, fixed income last week, negative. So yields last week, 2-year was up 10 basis points, the 10-year up 9 basis points. So the Bloomberg U.S. Aggregate Bond Index down last week, 19 basis points. And now on a year-to-date basis, still a solid showing, but way off its high. So on a year-to-date basis, up 2.01%. Now, this week, in terms of economic data, virtually nothing. Last week, chock full. This week, it's hard to even find data points that are that important. Thursday, always initial jobless claims expectation, 230,000 new claims from last week. The prior week, as we talked about, 229. Existing home sales for April also coming out on Thursday. The consensus is 4.1 million, a little bit better than we saw in March, was 4.02 million. And then lastly on Friday, new home sales, that's expected to be down a little bit. Month of March, 724,000. The expectation for June, or for April, the consensus, 690,000. So that's it. As a wrap-up for the economic update, we thank you very much for your attendance and hope to see you next week. Thank you.